What's up, everybody? Dave Bartosiak, and I've got another chart of the day for you. This time I'm talking about Humana. Now, sometimes I pull up these charts and I just can't believe it. This is what I'm going to do here, just to set the mood. I'm scrolling out to 2010 on Humana. Okay, so back then you're talking about a stock, in the 40s, 50s. Okay. Goes on an epic, legendary run all the way up over 540, okay? So if you're looking at this and you're an investor, you're thinking, what comes next? You're up over here, right? This ain't what you would have thought would come next, okay? I'm just throwing that out there. We've gone from over 560 down to under 220. Now we're at 242 and change. But what happened? Holy smokes, right? This isn't a biotech company. This isn't a .com bubble stock that we're looking back in retrospect. This is a medical insurance company. What are they doing? Okay, so as always, red line here, 200-day moving average. Blue line is 50-day, right? We're going to concentrate more on the 200 today because this is a long-term moving average that tells you the long-term health of a company. So it's not rare to see a company retreat, bounce under that 200-day. That's not rare. Gaps down. That happens too, right? You're at the 200, trying to regain it, and then there's some selling pressure. Get a gap down on earnings, it is what it is. But notice how, they tried to get some escape velocity here towards the end of last year to get past that 200-day and be normal again, and it didn't happen. Another spectacular failure that took shares down to $300. And that was a pretty decent shelf for the company for a while. And then here's a really, I'm going to call it weird. Okay. You have September 30th. You got sort of a stall right after this short bounce, and again, we're under the 200, we're under the 50. So it's all a lot of negative pressure, right? But you get this little bounce up, and you have this down day. And then the next day, you get an 11% drop. Now that was on a day where the market overall was under pressure. There was definitely money running to safety. Like, I understand all of this, right? It's all. But that wasn't the day where the news was, okay? The news happened the next day. The next 11, almost 12% drop. In between these 2 days is when we've got the actual news of this recent negativity. Was essentially the company saying that they are not as sure that they're going to reach their 3% Medicare Advantage margin as quickly as they thought they were going to, putting it out to 2027, yada, yada, yada. Was not earnings, right? Was a negative event for sure. But I think, in retrospect, it's easy to take a look at this and say that was overcooked. Right? That stock coming all the way down to tell you exactly where it came down to, 213.31. So holding your nose and buying the dip that day was smart in retrospect. And here we already have another kind of dip lower that's been bought again. Eventually, it's got to get into this gap, and I think it gets into the gap sooner rather than later because this just reeks of overdone. Again, $560. Now I know there's been some change in the business and there's a lot of cloudiness and whatever. And we had a ton of what really cracked me up, right, is that if you look around Wall Street, yesterday is the day where you got downgrades from a ton of investment firms, downgrading it to a hold or an underweight. I didn't see too many sell ratings, but just getting negative on it. Yeah. Don't get negative on it at 560, right? Get negative on it at 240 doesn't make a lot of sense to me, right? If anything, I think this is where you sort of need to start holding your nose and buying it if you believe in a recovery for the company. Now, I'm not going to really comment on that part, right? But this is what I will comment on. Is there's a gap here, and I think this gap is going to get filled, okay? When these markets get oversold like this, and we're going to continue to see this 200-day come on down, right? And this, well, hang on, let me kind of, this is sort of what my projected path of that 200 is. And this 50-day is going to come into play. Last time it did was basically September, right? We got a spike up, a rejection at the 200-day. And rejections at the 200-day, that's just kind of par for the course for this thing, right? The 50-day isn't as strong with this. It sort of guides it rather than a hard cap. That's what the 50-day does with a lot of stocks. So I wouldn't be surprised if we get into this gap a little bit and start to flirt with that 50-day, which will then eventually start to curve around, right? That's what I think we're going to see happen, is getting into the gap. Now, remember, this level, 249.88, essentially 250, right? Hard cap on this stock. Just like this was a hard floor for the stock. So there's 310 area. And then once that broke, I mean, forget about it, right? Tough time finding where the buyers were going to be. They found them down here. Now, why did they find them down there? Let's zoom out. Looky. So 2019, there were some buyers down there. COVID lows, we had buyers down there. And here we are at the same level. So is Humana just as bad as it was in 2019? That's what you have to ask yourself. Is there any recovery potential for this? Now, I think the dividend's something like 1.6% or something like that. So not a huge dividend coming off of it, especially given, where the 10-year is right now. But rates are coming down. And if you believe they're riding the ship, this is a stock that's on sale. So from a technical perspective, tons of negativity underneath that 200, underneath that 50. Looks like we're a little bit oversold here. You got the big spike in volume. Typically, those major reversals, you see big spikes in volume. So I'm betting that this thing gets into that gap. Now, what it does once it gets to, the 280s, in this case, 276.80 is the bottom end of that gap. So what it does when it gets there, I don't know. But if I'm a betting man, I'd be waiting for a little move there and then see what happens, right? If it breaks that on higher volume, and we do want to see a little bit of volume to confirm the breakout, then I think you can see a move to the 200-day, a rejection there, and we're looking for new lows. Well, there you have it, folks. That's my chart of the day on Humana. What will tomorrow bring? I have a feeling it's going to be something Chinese, because that's been all the rave lately, and over the weekend we did see a big gap down here, or last night rather, saw a big gap down on the Chinese index. So we're going to take a look at that tomorrow. For today in Humana, this is all I have for you, so be sure to follow the author. Go ahead and subscribe to the YouTube channel and come back here for tomorrow's episode of Dave's Chart of the Day. I'll see you all tomorrow.